Have you ever pondered how cryptocurrencies, a form of virtual money, have managed to shake the pillars of global economies? The story begins in the year 2009, when a person or perhaps a group of people under the pseudonym Satoshi Nakamoto brought to life the first cryptocurrency, Bitcoin. The creation of Bitcoin introduced a new concept to the world of finance: decentralization, a system where no single entity, not even governments, can control or manipulate the currency. This fundamental principle has become the backbone of all cryptocurrencies, enabling them to operate independently of traditional banking systems and government regulations. It's a system that champions the power of the collective over the power of a centralized authority. So, the birth of Bitcoin marked the dawn of a new era in the financial world, an era of decentralization and digitalization. The journey of cryptocurrencies has been nothing short of a roller coaster ride. Want to know why? Well, let's take a look at Bitcoin, the poster child of the crypto world. Born in 2009, Bitcoin started as a fringe project, a niche digital asset worth just a few cents. But as it gained momentum, its value soared, reaching an unprecedented high of nearly $20,000 in late 2017. However, this meteoric rise was followed by a dramatic crash, plummeting to around $3,000 a year later. This kind of volatility, wild ups and downs in value, has been a hallmark of cryptocurrencies and a source of both thrill and dread for investors. And yet, despite this volatility, or perhaps because of it, the popularity and acceptance of cryptocurrencies have grown. More and more people are willing to take the risk, lured by the potential for great rewards. Moreover, the world of cryptocurrencies has expanded far beyond Bitcoin. Today, there are over 4,000 cryptocurrencies, each with its unique features and use cases. Ethereum, for instance, introduced smart contracts, allowing for automated transactions without the need for intermediaries. Ripple, on the other hand, has focused on facilitating real-time international payments. Litecoin, often dubbed as the silver to Bitcoin's gold, offers faster transaction times and a different hashing algorithm. These and many other cryptocurrencies have enriched the crypto ecosystem, offering a variety of options for investors and enthusiasts alike. But it's not just about investing. Cryptocurrencies have also been hailed as a new form of money, one that is decentralized, borderless, and potentially more democratic. They have challenged traditional financial systems, spurred technological innovation, and inspired a wave of startups and projects in the blockchain space. The undulating journey of cryptocurrencies has added a new dimension to financial investments, making them a high-risk, high-reward venture. So buckle up, folks, because it seems this roller coaster ride is far from over. Ever thought about how a virtual currency could influence the real-world economies? Let's take a moment to ponder that. Cryptocurrencies, these digital assets that exist only in cyberspace, have made a significant impact on the global economy in ways that were unimaginable just a few years ago. They've taken the world by storm, opening up new avenues for investment that are as intriguing as they are complex. Take Bitcoin, for instance. It started as an obscure digital currency, but has morphed into a serious financial player. Early adopters who invested their faith and funds in Bitcoin have seen their investments grow exponentially. This has led to a ripple effect, with more and more people across the globe showing interest in cryptocurrencies as a form of investment. But it's not just about investments. Cryptocurrencies have also had a profound influence on monetary policies. Central banks around the world are now faced with the challenge of integrating these digital currencies into their financial systems. This has required rethinking monetary strategies and policies, and in some cases, even considering the creation of their own digital currencies. Cryptocurrencies have also spurred discussions about legal and regulatory frameworks. Countries are grappling with how to regulate these virtual currencies while balancing the need for innovation and the protection of consumers. These discussions are shaping the future of finance, prompting us to redefine what we understand as money. Moreover, cryptocurrencies have led to the emergence of new business models in the finance sector. Think about the rise of cryptocurrency exchanges, blockchain technology firms, and initial coin offerings. These are businesses that simply did not exist a decade ago. Today, they are at the forefront of financial innovation, driving growth and creating opportunities. In essence, the rise of cryptocurrencies has not only changed our understanding of what money can be, but also how it can influence the global economy. They have brought about a shift in economic paradigms, challenging traditional financial systems and prompting us to think about money in entirely new ways. Cryptocurrencies, thus, have not only changed the way we look at money, but also how we perceive global economies. So, what does the future hold for cryptocurrencies? As we navigate through the labyrinth of possibilities, several factors emerge that could shape the course of these digital assets. First, let's talk about regulatory challenges. As cryptocurrencies continue to grow in popularity, they're drawing increased scrutiny from regulatory bodies worldwide. Governments are grappling with how to deal with this new form of currency, balancing the need for regulation to prevent misuse and the desire to not stifle innovation. The decisions they make could have substantial impacts on the future of cryptocurrencies. Next, we turn our attention to technological advancements. The blockchain technology that underpins cryptocurrencies is still in its infancy. Advancements in this technology could make cryptocurrencies more secure, efficient, and versatile, opening up new applications and driving further adoption. For example, the development of quantum computing poses both opportunities and threats to cryptocurrencies. On one hand, it could vastly improve the security and transaction speed of cryptocurrencies. On the other hand, it could potentially break the cryptographic codes that keep them secure. Now let's consider evolving market dynamics. As more people, businesses, and even countries embrace cryptocurrencies, their role in the global economy could change dramatically. They could become a more mainstream form of payment, a viable alternative to traditional currencies, or even a new asset class. The adoption of cryptocurrencies by major financial institutions and corporations could also lend them greater legitimacy. Of course, with these potential benefits come risks. The volatility of cryptocurrencies could increase as they become more mainstream, and the lack of regulation could make them a target for fraud and cybercrime. Additionally, their potential to disrupt traditional financial systems could lead to economic instability. While the future of cryptocurrencies remains uncertain, one thing is clear: they have undoubtedly revolutionized the financial landscape. Only time will tell how they will continue to shape our economic realities. Let's quickly recap the main points we've discussed today. We started with the dawn of cryptocurrencies, a revolution that began with the inception of Bitcoin in 2009. This digital currency introduced a new way of conducting financial transactions, disrupting the traditional banking system and paving the way for a slew of other cryptocurrencies. We then delved into the volatile journey of these digital assets, highlighting the highs and lows they've experienced over the years. Despite the risks, the allure of high returns has continued to attract investors worldwide. Next, we explored the powerful influence of cryptocurrencies on global economies. They've democratized finance, enabled cross-border transactions, and even posed challenges to central banks' monetary policies. Looking ahead, we discussed the potential future of cryptocurrencies. Although the road is fraught with uncertainty, the potential for these digital currencies to transform the financial landscape is immense. Cryptocurrencies have undeniably made a significant impact on global economies, and it will be fascinating to see how they continue to shape our financial future.